Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. Well, what do we got going on with the market? Same thing we've had going on for 5 months. The march higher is continuing, right? Now, as long as we don't break the trend line is the 20-day moving average. As long as we stay above the trend line, we're going to continue to march higher. Now, I do think they want to see a 40,000 print on the Dow Jones Industrial Average. Now, we're about 900 points away from that. Will they push it up to get that 40,000 print? Very possible, but I do think that eventually we're going to break below the trend line and the market's going to come back in. That's just my take. We'll see how it plays out. A lot of the moon boys think that the trend line will never be broken and we're just going to march on up to the moon. But that's not my take. My take is that the markets will come back in. Now, is it time to short the market? No, but I wouldn't be long this market either. Look, at this market is extremely overbought, right? So it's really a no-touch situation for me. I don't want to be long the market, but it's too early to short the market. We have to get below the 20-day moving average to do that. That's just my take. Anyways, let's move over to the real estate market. Now, real estate, well, actually, I want to talk a little bit about the banking crisis. People are not aware there is still a banking crisis, right? New York Community Bank just got bailed out last week with $1 billion, right? That was private money. And I'm good with that. As long as it's private money bailing them out, that's better than me and you paying for it, right? But the banking crisis is far from over. It started, well, basically a year ago, right? A year ago, almost to the day. That's when, well, Silicon Valley Bank was the first one to go down. And that's when, I mean, the FDIC, it's supposed to just insure your money up to 250,000, but they had to insure everybody's money. Otherwise, there'd be a run on all the banks. So they just say, we're going to insure all the money, but they don't have the money to insure it. They have less than 1% of every dollar in there. They have less than a penny. Okay, but that's what's going to happen, right? There's going to be a bailout of some sort for the banking system. But a lot of people think that the crisis is over, that the crisis has gone away. Look, we've lost 10% of the top 50 banks. We've lost 5 of them just in the last year. This is far from over. This is not anywhere close to over. And we're going to talk a little bit about that as to why, right? Okay, what's the problem with the banks? Well, the problem is, well, we had the CPI number, right? And the CPI number came out and said that inflation is coming back. Inflation's not dead. It's actually coming back. So will the Fed lower rates? Well, if they don't lower the rates, the banks are going to be in big trouble. So will the Fed start to lower the rates? Now, Jamie Dimon, he's got, JP Morgan, he says the Fed should not lower rates. Now, he doesn't want the Fed to lower rates because he knows that the other banks will go out of business before him, and maybe he can pick up the assets on very cheap fire sale prices and keep his bank alive longer. So Jamie Dimon kind of wants the Fed to keep rates high, but the Fed can't keep rates high because all the banks are going to start to fall over like dominoes. For example, okay, so they have all these loans. There's our commercial loans on their books, right? Now, these loans, they could be for anything. They could be for office buildings, hotels, they can be shopping centers, apartments. I want to talk about multifamily today. I want to talk about the apartment buildings. Now, apartment buildings, the loans are in default. They've quadrupled just in the last year. The number of people that own an apartment building, let's say they have a 100-unit apartment building, the number of people that default has gone up by 4-fold just in the last year. Why is this? Why? I mean, look at the vacancies. Vacancy rates are starting to go up, right? But the rents are still high, right? But vacancy means there's about 7% vacancy rate right now, which actually takes us back to pre-pandemic levels. We have a 7% vacancy rate in these apartments because they can't get them rented. The ones that are rented, they're rented at a high number, and I agree that they are getting high rents still. But those rents are going to start to come down because they have a high vacancy rate. So even though the rents are high, the landlord, the owner of the building, if you will, is not bringing in enough money to make his payments on his mortgage. Okay, now his mortgage is coming due, right? They don't have 30-year money. They have 2-year, 5-year, 10-year money. And those notes roll over and they come due. But now what's happened? Well, the notes are now rolling over at 7 and 8% when before they were down at 3%, right? So they got to roll them over at a higher figure. Well, when they go to the bank and the bank says, well, what's your vacancy rate? Well, vacancy rate's 7%. And they say, well, okay, we'll go give you a loan at 8%. And the people, they can't afford the loan because the rents coming in won't support the payment. So what do? They either give the key back to the bank, which a lot of them are defaulting. Defaults on apartment buildings are up 4 times what they were a year ago. Okay, but what else happens? Okay, well, they try to sell the building. But here's the problem. How much is the apartment building? Let's say you have 100 units. How much is the apartment building worth? Well, it's worth much less than it used to be because 7% of the people, well, are vacant. There's no one living in the units. So 7 units are vacant. Let's say it's $2,000 a unit. All right, 7 units are not getting that $14,000 a month coming in anymore. Now, over the course of a year, that adds up to a lot of money, but 7% vacancy rate. But they can't sell the building because when the building was trying to sell that 3%, the building was worth a lot of money. But at 7 or 8%, now that building's worth about half of what it used to be worth. You see, it's not like residential real estate. Residential real estate is a little more emotional. You know, I need a house. I want to get a house. I'm going to go buy a house, even though rates are at 7%. A lot of people are still out there shopping for a house. They're trying to buy a house. Now, they have to buy a smaller house because they can't afford a house that they could at 3%. And the good news is that the home builders are starting to build smaller houses. Why? Well, because nobody can afford to buy their house. Now, their idea of a smaller house is 2,200 square feet. That's what the home builders think is a small house. They think 2,200 square feet is small starter home. Now, the small starter home happens to have 4 bedrooms, 3 bathrooms, right? But 2,200 square feet is what they've dropped the size down to. It used to be about 2,250. So it's coming down a little bit at a time. They're building smaller homes. But they can't build. Why can't they build like 1,300, 1,400, 1,500 square foot homes? Well, because it's not profitable. After they have to pay for the permits and everything, all the regulations that they have to jump through, they can't make profit at 1,300 square foot homes. That's why they build these mammoth 2,200 square foot starter homes. And who's buying these 2,200 square foot starter homes? Kind of interesting. It's usually people, 2 people working, double income, no kids. Double income, no kids are the ones buying these starter homes. Now, do they need the space? Not really. They don't need the space if they don't have kids. But that's the starter home now, 2,200 square feet. I got a little carried away there. But the reason the apartments are going to be coming down in rental prices is because of the vacancy. And they're going to be coming down because there's going to be a new owner. You see, let's say the guy bought those 100 units, and let's say he paid $50 million for the 100 units, right? Well, now the new owner is going to buy that from him at $25 million. You see, maybe he gives that back to the bank first and the new owner buys it from the bank. So the new owner's into it for less money, and therefore he can charge less rent to get those occupancy rates filled, right? 7% will start to get filled. You're going to see cuts in rates coming in many areas. Rental rates are already dropping. Now they're dropping not for existing tenants. Existing tenants, they just send you the bill, you know. You're going to renew, okay, we're going to only raise you up 5% this year. But what my friends are doing, I have a lot of friends that they live in apartment buildings. What they're doing is they're moving. Now they can move every year, right? They sign a year lease. And when they move to a place that gives them 3 months free rent, which is really a 25% reduction in rent. You get 3 months free when you sign the year lease. So you're only paying for 9 months. Yes, you're paying at the same as the existing people, but the existing people aren't getting that 3-month free rent. Now, when the existing person complains, they say, well, but that's their moving costs. That's why we're giving them a 3-month bonus. You still have to pay the high rate. So it does pay right now to actually go apartment shopping. shopping and find a new apartment that offers a 3-month move-in bonus. Right now, if you have to move every year, I know that's a pain, but a lot of people that live in apartments, they haven't accumulated a lot of stuff yet. I hate moving because I've accumulated a lot of stuff. I'm an old guy, and when I have to move my stuff, I hate it, so I would stay in the apartment at that point. So if you hate moving, you're going to be paying the high rate. But if you don't mind moving every year, you can actually get rates about 25% cheaper, if that makes any sense. But rents are going to start to come down. There's going to be new owners of the apartment buildings, and the rents are going to start to fall. Now, what's that going to do to the housing market? Well, as rents start to fall, the houses are not going to look as attractive. A lot of people are going to stay renting because they can do that for, well, about half the cost of owning a home. You can own the home or you can rent the home for half as much as it costs to own the home. So eventually the pressure is going to come on home ownership, and that's going to send those prices down. Now, once those prices start to go down, then you got the circling the drain effect, and everybody will be racing to get out, and you'll see the inventory coming onto the marketplace. And as we start to spiral downward, now I say we're about 40% above the long-term moving average, 40% above the mean. Now, don't discount reverting back to the mean. We always revert back to the mean. And now we can revert back to the mean in a couple different ways. Either house prices will drop by 40% or your income will double. Now, I'm betting on house prices dropping before your income doubles, because it's not just your income. Everybody's income would have to double. So I think the house prices will drop by about 40%. Once again, just my take. A lot of people don't agree with that, and that's fine. A lot of the moon boys think we're going to double from here, and that's perfectly fine. But back to the banking problem. The bank owns the commercial paper of these apartment buildings. They own these mortgage-backed securities of the apartment buildings, right? So the banks are now taking back the key to the apartment. They're the ones having the fire sale. What was 50 million is now 25 million or 20 million or even down to 15 million. The bank is losing a lot of money. They're getting squeezed. They're getting squeezed from all directions, right? Okay, you bought your house, you got locked in at 2.8, but they're paying 6 and 7% to depositors for that money, right? So they cannot make enough money. They're losing money on you, and eventually they will go under. They will fall over like dominoes with mostly commercial real estate, but they're also getting hurt on residential real estate. It's much worse than it was in 2008 even. These banks are going to go down like dominoes. Now, granted, the bank term funding program just ended, right? So they can't take these bad mortgage-backed securities that are 50% underwater anymore and bring them to the Federal Reserve, and the Federal Reserve would give them 100%. That program's over. It's done. Now, granted, they have billions, hundreds of billions of dollars outstanding to the Fed that they're supposed to pay the Fed back, but they don't have the money, so the Fed has been gracious enough to extend the payment on the bank term funding program for another year, and they'll probably extend it another year and another year and another year. But they want you to go to the discount window and borrow money if you're a bank. As soon as a bank goes to the discount window, everybody knows they're in trouble, and then they get the run on the bank, and nobody wants to do business with them, and the bank falls over. And then they go, well, who do they go to? Well, they go to Jamie Dimon. Jamie Dimon, you want to buy our bank, because J.P. Morgan and the Fed, they're intertwined. Jamie Dimon can get as much money as he wants from the Fed to buy these fire sale assets from any bank that goes down. That's why Jamie Dimon doesn't want to see the Fed lowering the rate. As the Fed lowers the rates back to zero, the banks will stay in business, but then we'll start to hyperinflate as a country. So it's a rock and a hard place. Do you lower the rates to zero, keep the banking system alive, and then we hyperinflate? Or do you save the banking system? Well, if you save the banking system, then by lowering the rates to zero, we will get the hyperinflation. But if you let the banking system go by keeping the rates up here to fight inflation, then the banks go. So either hyperinflation comes or the banks go under. It's one or the other. There's not a way out at this point. We've kicked the can down the road too far. We're not going to last another year, another 2 years, another 3 years. It's coming to a head. There's going to be a reset. There's going to be a great reset, if you will. And I'm not exactly sure exactly how that will look. I just know it's going to happen, and I know it's going to destroy the dollar. The dollar's going away. All the money you have is going to go away. It's just how it works. You're going to get a new money, going to be called the central bank digital currency, and you're going to beg for that new money because the dollar will not buy you anything anymore. That's just my take. I'm Tall Mike. You like this stuff? Give me the thumbs up. Punch the subscribe button. Get out there, everybody. Have a great day. We'll talk again soon. Bye-bye now.